Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can write to us on the number that will be flashing on your screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, then mention that as well. And if you've already invested, mention the quantity, the buy price, as well as the time horizon that you're looking to hold on to a counter. In that way, our experts will be able to help you better. Talking about the experts, we have Kunal Bothra, who's joining us on the technicals, while on the fundamentals, we have Ashish Maheshwari on the show. And before I start taking your queries, Ashish, since we were talking about the FMCG space a short while ago, talking about the Q1 updates, you also the banking names that have come up with the Q1 updates. What's your outlook with these initial trends that you can see with both of these sectors?
See, as far as FMCG sector is concerned, this is one of the again performer sector only in this year, and I think from 52-week high, it is just 800 points away, and the 50,000 point index. One good thing is that if we see from 2020, the market of Indian FMCG was $110 billion, and in 2025, it is supposed to be $220 billion. So where you will get such kind of growth, and this is the reason why Indian FMCG stocks are almost all these stocks are quoting at 30 to 60 price earning multiple. If we talk about again from Q1 point of view, I think companies like Marico, Dabur, Emami, Godrej Consumer, they are doing phenomenally good because they have declared that higher single digit growth will come in whatever the product portfolios are there. And I'm quite bullish that because of good monsoon this time, along with a lot of government schemes where they are giving freebies to 800 rupees to 2000 rupees in everyone's bank account. Where that money will go? Ultimately, they will buy the FMCG products only. And this is the reason rural growth will be much higher than your urban growth in FMCG. So, sector is looking quite promising. And companies like Marico, Emami, Dabur, Godrej Consumer, they are my top picks in this sector.
All right, so those are the topics coming in the FMCG space for Ashish. But let's start with taking your queries then. And the first one is coming from Arun. He's writing to us from Chennai. And he wants to know if he can look to buy Satin Creditcare for the long term. What's your take, Ashish? How is this one looking like? Do you think it's a preferred bet in that space that one can look to park money for the long term?
So I'm not that bullish as far as mid-size NBFCs are concerned. In my view, RBI is keeping a quite lot of control and checks and balances for mid-cap NBFCs stocks of the companies as such. So I'll suggest instead of this, better you take a call on any bank instead of taking call on NBFCs. And NBFCs is a sector. If you read Bajaj Finance and Bajaj Finserv, they've underperformed in last 1 year time, and I'm not expecting any outperformance coming in this sector in haste. So my suggestion will be to look at a banking stock like Equity, a small finance bank, or even a small finance bank, then Satin Creditcare.
It's from Tina and it's for you, Kunal. She's invested in Adani Enterprises. Buy price is 3,120. Adani Total Gas buy price is 1,090. She wants to know whether should she continue to hold this counter or exit. And if exit, then what is the alternative trading idea that you would suggest to her?
So yeah, I would recommend to exit Adani Total Gas at least. Adani Enterprises is still something which looks fairly positive. Yes, both these stocks have gone through a sharp phase of correction very recently. Adani Total Gas specifically, I think from that June highs or July highs of 1150 has not been able to get into any kind of a major resurrective mode, and it's now come back to that 885 levels for Adani Total Gas. So I would believe that it makes a lot of sense to shift this capital towards some other name. I would recommend something in the morning which I highlighted in the chart busters, D-Mart, Avenue Supermart. That's a chart which looks attractive. It's come back into a recovery mode, and the good part is that the stock is still available at a good risk reward at 4850, 4900 mark. So I would recommend that.
All right, this one, I'm coming back to you actually, Kunal, once again. This one is coming from Venkatesh. He's writing to us from Indonesia, and he has about Campus Activewear in his portfolio. 100 shares of Campus Activewear at a price of around 285 rupees per share. He wants to know if you can advise any stock that he can switch to from Campus Activewear right now.
See, I think I would recommend two names, but of course from completely different sector altogether. BHEL is something which is looking attractive at 315, 320 mark where it's trading right now. You have Navy Lignite, that's another name which is looking attractive. Hindustan Copper, I think at 335, 336 is something which has started to look or get into a recovery phase. So you may want to look out for these names. But just one catch is that it could be a complete shift towards high beta stocks as compared to maybe a low beta name of campus active wear.
Well, the next query is from Balakrishnan from Chennai, and he wants to know the right time and price to accumulate Titan and IDBI Bank for long term. Ashish, what would be your view on Titan and IDBI Bank?
Sorry, market was not too happy with Q1 updates of Titan, and this is the reason we are witnessing some correction. And then last 3 months also, even we have seen the jewelry stocks are not going anywhere. So I'll suggest to wait for at least another 200 rupees fall in Titan. So fundamentally, nothing wrong with the company, but as the gold prices are at almost all-time high, so some amount of slowdown is expected in sales velocity of these companies. So maybe below 3,000 rupees you can wait. IDBI Bank, as far as IDBI Bank is concerned, I'm again not that bullish on this stock. Again, this stock is moving in very narrow range and not going anywhere. So IDBI banks or IDFC banks, etc., are quite laggard in this market. Instead of this, I think better to focus on frontline bank, which may be IndusInd Bank or Federal Bank.
All right. This next one is coming in from Reena Thomas, writing to us from Kerala. She has about 1,000 shares of Union Bank at a price of around 165 rupees per share. Kunal, how does Union Bank look on the chart? You think it is advisable that she stays put with this one, or should she make a switch out of Union Bank?
So again, depends on your time frame. But first, important understanding is since the last 1.5 odd month from the exit poll day, the PSU bank is one of the weaker sectors relatively as compared to many of the other sectors. I think if I'm not wrong, the PSU banking index from that day's closing is almost down some 7-8%. So I think that itself tells you that it's been one of the weaker sectors. And from that pack, Union Bank is also one of the weaker stocks because now the stock is coming back into a retest of a 200-day moving average. So imagine at a point where many of the private sector banking stocks, etc., are trading significantly above the long-term moving averages, this stock is underperforming. So if you are a short-term investor, then I would probably expect the stock to drag a bit more and maybe correct towards say 120 mark or slightly below those levels also could be possible. Depends on how the PSU banking index shapes up over the next few months. So I would probably advise that if you've bought recently and if you're okay holding on to the stock, then it's a different ballgame altogether. But if you're a short-term investor, then it could be a good time where below the 200 moving average, in case if the stock breaks, look to exit.
The next query is from N. Lakshmi Nagini from Hyderabad. Now, she was allotted 37 shares of Gopal Snacks at a price of 401 at the IPO. Currently, she's sitting on a loss and she wants to know whether should she continue to hold this counter for long term. Ashish, what would be your view for Gopal Snacks?
In stock after initial euphoria, what was there around these companies again going nowhere. So I suggest instead of this, first you can book loss and shift to Bikaji Foods, which is delivering much better returns, and we have seen many buy reports also on this company and much larger in size compared to Gopal Snacks. So better sale exit from Gopal Snacks now.
Okay. This one is from Sunny, who's writing to us from Kolkata, and he wants to know about Dwarikesh Sugars. About 200 shares he has at a price of 80 rupees per share. Kunal, how does Dwarikesh Sugar look on the charts to you? He's asking for a medium-term view on Dwarikesh Sugar for you.
Well, not an exciting chart because over the last 10 months or so, it's been trading below the key moving averages, specifically the 200 DMA. The stock had broken below this level at around 92-94 levels, I think in October, November 2023. And from there, the stock has been into a drag. So I'm not sure the rationale of buying Dwarikesh Sugar as compared to many of the other sugar stocks, which are actually trading with a much more better positive bias. I would probably believe Bajaj Hindustan, which I recommended in the morning also, looks to be a better place stock in terms of a potential breakout. Praj Industries is one of the best stocks in terms of price performance relatively, where the stock has done exceptionally well in the last 2-3 months also as compared to many of the other peers. So better to make that switch into some other formidable name.
The next query is from Srinath from Chennai, and it's for you, Kunal. He wants to know the short-term view and targets for two stocks, that is BML and Mazgaon Dock.
So BEML, I would believe after that Friday's move somehow gets into a zone of overbought. So you might probably expect the stock to get into a drag. My sense is that the range now for BEML could be say 5,050, 5,000, as a support. And on the upside, you could probably look at 5350, 5400 as a resistance of sorts for BEML over the very short term. For Masgaon Dock, on the other hand, the range for the stock which I would expect would be closer to 5,400 on a very short term basis, and 5750, 5780 as a resistance on the upside.
Ashish, coming to you, IRFC is the stock that Nikhil Sharma has, about 100 shares of IRFC, which he's purchased at levels of 203.8 rupees per share. He wants to know whether he should go ahead and book profits or continue to stay put with IRFC. If you look at this buy price, it's actually 203, so he's not making a profit as of now. But what's your take coming in on this one? Stay put with this, and hopefully he'll be able to recover whatever his buy price was?
I think you can remain invested in these stocks till budget. Though this is an expensive stock with 2.5 lakh crore market cap and company making around 6,000 crore kind of profit. But only thing which goes in favor of these companies are they are into monopoly kind of market, because all railway funding need to be routed through IRFCs only. So they'll continue to make steady margins and will remain in demand as the sector is quite fancy, and I'm expecting significant rise in budgetary allocation also in railway sector this year. So you can remain invested. Maybe you can try to exit somewhere at 225 to 230.
The next query is from Krish and it's for you, Ashish. I guess based on your past recommendation, he has bought around 50 shares of Zentech at a price of 950. He wants to know whether should he continue to hold this counter or sell, given the fact that the stock has run up too much.
So stock has gone up, but on basis of fundamentals only. This company almost having 1,500 crore worth of order book and doing phenomenally well. We have seen quarter over quarter good numbers. Only for last 6 months as this was into ASM group, etc. So stock has not moved. Otherwise, a very performer stock. And in my view, if you can hold for this year, maybe you'll see 2,000 rupees also here.
All right, this one is coming in from a viewer. Just a second. This one is coming in from Ashish. Your namesake Ashish, but this query is coming in for Kunal. Kunal, Ashish is writing to us from Mumbai. He wants to buy Tirumalai Chemicals as well as Bombay Dyeing. He wants to hold these counters for the next 12 to 18 months. He wants to know what's a good entry level for both of these counters.
Yeah, so I think both of the charts are looking attractive at current levels itself. I think they are very close towards breaking past about their multi-week swing highs. Tirumalai Chemical, I think around the 330 mark, I think is the breakout. Stock is at 315 levels, which means the a short stub wait for 5% as a breakout for Tirumalai Chemical, and the Bombay Dyeing also I think around 225 if I'm not wrong is the breakout point, and the stock is at 212 to 10 levels. So both the charts are looking attractive. You can look out for an upside target, say closer to the range of 10% from current levels, which means at least a 5% upside from the previous swing high is what you can expect over the near term.
The next query is from V. Murli from Bangalore and it's for you, Ashish. He has bought Nuvama Wealth at a price of 4,900 and Keval Kiran Clothing at a price of 737. He wants your advice whether he should continue to hold both these counters, Nuvama Wealth and Keval Kiran Clothing.
See, these wealth management stocks have given very good return to investors, be it Nuvama Wealth or Anand Rathi Wealth kind of a stock. So, because again, the business model is simple, is very less capital intensive, and the kind of money they are making is huge. So, these stocks will continue to drive very higher valuation. So, my target for Nuvama Wealth in this year will be 5,500 to 5,700. So you can continue to remain invested here. And which was the other query?
Keval Kiran Clothing.
Yeah, even clothing again compared to peer set, this stock is doing good, and from highs of 820 odd levels, stock is slightly lower than that, but fundamentally company is doing good. And my target for this stock will be once this quarter number comes will be 750 plus. So remain invested here.
Well, that was Ashish Maheshwari's view on KKCL and Nova Wealth. With that, let's slip into a short break and we'll continue taking viewer queries post that.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's continue taking all of the stock related queries then. And this next query that I have is coming in from Suresh, who's writing to us from Ludhiana. He's saying that he's a long-term investor. He has Adani Wilmar in his portfolio, about 200 shares at a price of 377 rupees per share. Ashish, he's been holding this for the last 1.5 years or so. He wants to know whether he should stay put with this or look to exit. What's your take coming in on Adani Wilmar? This one has not performed on par with other Adani players, isn't it? So what's your take? Stay put with this for some more time or look to exit?
I think exit is advised here. Again, rationale is that what is going to be the fate of this company? There's some uncertainty whether Adani will sell and Wilmar will buy or what will happen. So this kind of uncertainty is there. So not too much capex what Adani Group is doing in other businesses is not happening in this company. And that is why we have seen the performance is also muted. So my suggestion will be to exit from this underperformer in FMCG pack and instead look at Marico or Emami, which can give you much better returns.
The next query is from Subramaniam from Chennai, and it's for you, Kunal. He has around 30 shares of Allied Digital, bought at a price of 132 6 months ago. He wants to know the short-term target for this counter.
So after the last week's price volume breakout, I think almost a 60 rupee up move from 160 to 225 approximately for Allied Digital, you can probably expect the stock to move up higher by another 50% of the margin of the 60 rupee rally. So which means you could look out for 260 to 65 as a potential target just based on the patterns as well as the volumes.
All right. This next query is coming in from Ravi, who's writing to us from Hyderabad. He wants to know whether it's the right time to go ahead and invest in a Kotak Mahindra bank for the longer term. What's your take, Ashish? Do you think makes sense right now to go ahead and invest in Kotak Mahindra bank? Or is there any other counter that you think is attractive instead of Kotak?
The bank again slightly underperformer bank if you see in private sector banking stocks. So from knee-jerk reaction when their business was having some issues and RBI has put some spanner in their new client onboarding, etc. Those were there, but after that gradually it is going up. But still, in my view, this is very slow and steady kind of a stock. So instead of this, I'll put my bet on ICICI Bank or IndusInd Bank, which can give you much better return than Kotak Mahindra Bank in long run.
Next query is from Akhil from Delhi, and it's for you, Ashish. Akhil is already an investor in TCS. He has bought few shares at a price of 3,400. He wants to know whether should he add more at current levels, and also he wants one suggestion from you on one of the mid-cap IT space where he can invest.
So as far as TCS is concerned, again very slow and steady kind of a stock now it is because if you see institutional participation is more and more coming into more domestic and inward-looking sectors instead of IT sector, which is primarily dependent on export side. So though it's slow and steady, but you can still continue to remain invested here. As far as any other mid-cap stock is concerned, I like the stock of Netweb Technologies. This is a stock which is again proxy play to NVIDIA because they are the local partners in NVIDIA for semiconductors. And stock has given excellent return from the IPO listing time and where hardly any floating stock is there. So I find a lot of potential in Netweb Technology, though valuations are expensive, but growth visibility is also very high.
All right, Kunal, coming to you. This one is coming from Khatir, who's writing to us from Bangalore, and he has some 5 shares or so where he is seeing over 15% profit approximately in those counters. Now he wants to know which of the counters do you think he should look out to book out profits or stay put with. You can choose to speak about 1 or 2 out of those, or 3 for the if he is lucky today. TVS Supply Chain, Paradeep Phosphate, Ambika Cotton, Balkrishna Industries, as well as Munjal Showa at the counters. Looks like most of this tilt is towards the auto ang space.
Yeah, it looks like. And TVS supply chain, Ambika Cotton,
Paradhi Phosphate,
Paradhi-
Balkrishna Industries, as well as Munjal Shoa.
So I think Balkrishna Industries is the only one which looks very strong. TVS supply chain also, I think, seems to be coming back into a recent recovery after a bout of sharp correction the stock had seen in the, I think, the last 8 or 9 months. So I think from 150-60 levels, it's come back towards 190 plus mark. Looks to be that the stock is likely to get into a further recovery on the upside. So I think out of the list of stocks which you mentioned, these are the only two names where there seems to be more stability of price uptrend. So what you may also want to do is, for the other stocks, you may look to have a trailing stop loss at play. You may look to maybe book out partial profits over here, and for the balance quantity, keep a trailing stop loss. And in case of the trailing stop loss doesn't get hit for these stocks, and that could be maybe the last 3 days of swing low, if that's a good buffer for these names. So keep that as a buffer, and then keep on trailing the stop losses, because what could happen is that if the mid caps and small caps and many of the stocks which you mentioned, if they continue to move up higher, you could be at a point where the near-term upside could be significantly high. So best is to try and book 50% profits, trail stop loss for the balance for the other 3 names.
The next query is from Sajju Isaac from Kochi, and he wants to know whether it's the right time to buy the shares of Britannia Industries for long term. Ashish, what would be your view for Britannia Industries?
See, instead of Britannia, though stock has given good return, and I find it's expensive now because 50 days high is almost 5,725, and a stock is almost at 5,500 rupees. So instead of Britannia, I like more Marico and Emami. If you ask me, it can give you much better returns because again, this expensive stock as far as one of the most expensive stock as far as the valuations are concerned. So the upside is quite limited here compared to how Marico and Imami are delivering returns as well as their future growth visibility is there.
All right, Kunal, coming to you actually. This one's coming from Manjula, who's writing to us from Chennai, and the stock that she wants to talk about is ITDC. She has about 25 shares at a price of 601 rupees per share, approximately 50% profit. Is it advisable to stay put with this one or look to book profits? And ITDC is among those PSU counters which we've not mentioned about, right? Given the fact that this one also is rallied in tandem with the rest of the PSU pack.
Yeah, and the last 1 month has been quite good for the stock, because from 700 levels, it's moved on to almost at 900 mark, for itself, and that too on the back of incrementally high volumes. I would not say a higher chunk of volumes consistently, but incrementally higher volumes is what we've seen as a pattern over the last 1 month for ITDC. So I would probably believe that maybe this could be a sign of a bigger trend in the making. Best strategy over here is to try and trail your stop losses. So I would probably suggest keep the last 3 days of swing low, 4 days of swing low. That could be around 820, 825 mark as a conservative stop loss for ITDC. Until the time the stock trades above those levels, continue to hold on.
The next query is from Shrikant from Hyderabad, and it's for you, Kunal. It's on Vedanta. He has around 100 shares, bought at a price of 320. He wants to know whether should he book profits or continue to hold his counter.
Well, short-term wise, you can look to book out profits, but I would believe that on the longer-term basis, the stock is on the verge of a major breakout above the previous multi-year highs. I think 495, if I'm not wrong, is the previous high for Vedanta on the long-term charts. That was in 2010-11, and the stock is coming very close towards the breakout. So higher upside or higher term upside could start off once the stock confirms a breakout on the upside of this 495-500 mark. So it depends on your time frame. Short term wise, I think it's a good gain which you are benefiting from Vedanta. So maybe in that sense, you can look to book profits.
All right, let me take a combo view from both of our experts on Titan particularly, because we have a lot of queries today on Titan, and needless to say, the reason being that the Q1 performance was a bit dismissed, or operational performance, and that's one of the reasons why the stock has also seen a decline over the weekend, or rather last week we also had a brokerage note that downgraded Titan. So needless to say, you will have a lot of investors pretty perturbed about this one. So we have one from Bisaka, who wants to know if she can invest in this for the long term. Namita wants a sort of a target for this one because she's bought Titan at a price of 3,500 rupees per share. Also, you have Ron, who wants to know whether he should invest right now. Balakrishna wants to know whether he should invest right now, and Kumar has been holding the stock since the levels of about 2,400 rupees per share. So first, let me take your view, Ashish, when it comes to Titan. people who are looking to invest in it right now, does it make sense for them to look at Titan right now, given the fact the stock is dipped from those elevated levels? 14% in the last 3 months is what Titan has lost. So do you think fundamentally everything is intact? You can look at this as a long-term play and stay put with this if you're already holding?
Yeah, if any investor is already holding, then I think you can continue to remain invested. Their store opening, etc., is one target. They did even 61 stores this time, almost now 3,100 stores they are having. Only thing is that jewelry sales were just 9%, which is much lower than what the street was expecting. At the same time, their emerging business growth was also just 4%, like new range of clothing, etc., what they have launched. Though watches and wearable segment has shown 15% kind of growth, which is in line. But in my view, sometimes you have bad quarter, and this was one of the bad numbers from Titan. But it's only one-off kind of thing. I think once this festive season will start next time, we are going to have again good commentary. So use the opportunity even at 3,000 rupees to add in the portfolio if it comes to those levels. And those investors who are holding, even can think of averaging at 3,000 rupees.
All right, stay put with Titan for the longer term based on fundamentals is what Ashish has to say. Kunal, what's your view coming in? If somebody wants to venture into Titan right now, do you think these levels are attractive? Can look to buy at these levels? And also, what about those who are already holding this counter?
Well, I think it should be a time to be a bit more cautious over here, not to venture into the stock, because clearly the stock has given triple confirmation of a breakdown below its long-term averages. Now I understand that Titan, of course, is a high-value stock. It's done exceptionally well over the last couple of decades and more. But when you look at the recent charts, there is a definite amount of weakness which has crept into the stock. In the month of April itself, the stock had broken below its long-term averages. 2 attempts for the stock to break past about those levels back again, but those turned out to be failed attempts, and the stock is now coming closer to a 52-week low breakout. So when you look at this kind of a trend, it indicates that a near-term weakness is in the offing, and it's very difficult to gauge that how far can the stock correct in these kind of scenarios, because we've seen many a times that stocks, when they break below their long-term averages, they can drag for 6 months to 1 year also on the downside. So that's why I would probably believe that it's better to be on the sidelines over here rather than go aggressive and venture into a bottom formation.
Well, that was a comprehensive view when it comes to Titan. And with that, let's slip into a short break and we'll address more of your queries post that.
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's continue taking your queries. Then this one is come from Ravi Shankar, and he wants to know about South Indian Bank 100 shares at a price of 34.5 rupees per share. He wants to know whether he should stay put with South Indian Bank or look to exit out of this, or if exit, then Kunal, any other counter that you can advise him to invest in. South Indian Bank, a lot of investors actually started venturing into this counter because of the way it actually saw a sharp rise in between, isn't it? Now the stock 3 months, 7% down. What's your outlook on the charts?
Well, it's gone back into a corrective phase, and the tricky part about South Indian Bank is that the stock has this tendency of going into very big uptrends, short span of time, and then more prolonged downtrends where the stock corrects, goes into a mean reversion. Same happened, I think, in 2022-23, where the stock had rallied, I think, from 8 rupees to 18 rupees or 19 rupees. And from 19 rupees, with the stock had hit in December 2022, the stock went into a drag for almost 5-6 months, coming back towards 12.5, 14 mark for itself. So I think it depends on the time frame which you're looking out for. Short term wise, yes, the stock seems to be on the weaker footing, but maybe on the longer term basis, it could just be completing a leg of a mean reversion or a correction. So if you're a long term investor, you can use these dips to accumulate further, and then look out for whenever the stock gets into a recovery phase. I think the previous highs of 34 should be taken out.
Next query is from Sushila, and she has 333 shares of Inox Green bought at a price of 170, 378 shares of RVNL bought at a price of 156. Ashish, she wants your view whether should she continue to hold both these counters or exit.
Yeah, I'll suggest to remain invested in both these counters. Again, Inox Green has successfully raised funds recently, and this is going to be a re-rated company in this particular segment in case of green energy. As far as RVNL is concerned, I think they are going to be a nodal agency for whatever the projects railways are undertaking. Another thing is they have started aggressively bidding for metro projects on pan-India basis. So the league of this company is going to change. And there's a reason we have seen recently 1 lakh crore market cap crossing of RVNL. And I am very bullish as far as RVNL is concerned. And in fact, this is the best railway pick even after this recent surge.
All right. This next query is coming in from Karishma, who's writing to us from Delhi, and Kunal. She's asked and she's given, in fact, almost main sectors where you can look to invest in. She wants to know whether she should look at banks, and in banks, should she look at SBI? In pharma, should she look at counters like Indico Remedy and Marksons? She wants to allocate some fresh money into this. So, do you think it makes sense, SBI in banks? And if you're looking at pharma, a name like Indico Remedy or even Marksons Pharma?
Well, Indico Remedy is something which looks attractive. So I'll take the second part first. It's come back above its 200 moving average at 330, 35 approximately is where the stock had given that kind of a breakout. So it looks attractive. The setup is quite well for the stock on the long term basis. Risk reward very attractive compared to the previous lifetime high for the stock, which I think, if I'm not wrong, is at 500 mark. So the risk reward is very much positive for Indico Remedies. Other than Marksons Pharma, I think this could be a better bet. From the banking name, SBI could be one of the best bets. But as I said earlier, that the PSU banking index has fallen by a margin of 8% to 9% from the last 1.5 odd month highs. So maybe that could be a point where you might see even a large cap name like SBI going to a drag. Relatively, yes, it's one of the stronger names, but just because of the pressure which is coming back into the PSU banking stocks, I would believe SBI can also tend to just about consolidate.
The next query is from Padma Siva Rao from Bangalore, and she has around 100 shares of Nazara Tech bought at a price of 500 rupees. And she wants to know whether should she continue to hold this counter or sell 50% of her shares and invest in some other counter. Ashish, what would be your view? And if some other counter, which counter would you recommend?
No, I'll advise to remain invested here. I think this company is in niche segment, and after the GST related issues, where like it was whatever the proceeds of gain was there, it was supposed to be priced at higher tax rate. But I think those things have taken a backseat, and the way our kids are adopting online gaming, etc. I think these kind of companies will continue to do well. So my target for Nazara Tech will be maybe 1200 by end of this year, and you should remain invested in.
All right, this one is coming in from Rebecca. She's writing to us from Kolkata, and she wants to know about Tata Consumer. She's purchased about 12 shares at a price of around 1,143 rupees per share. She wants to know what's the future of the stock. She wants to hold this for the longer term, and does it make sense for her to add some more in the portfolio? Today, the stock is doing well with the rest of the FMCG pack among the top gainers on the Nifty. Ashish, what's your take? For the longer term, Tata Consumer, do you think that she should stay put with whatever she has, or it's okay if she adds some more?
I think you can continue to remain invested in Tata Consumer, as again overall sector performance is improving, and Tata Consumer has also over a period of time has delivered good set of numbers also. So my target for this stock is 1200 rupees plus in short term, and on any correction, in fact, if you get the stock at somewhere around 1100 rupees, can be added in the portfolio. But only thing is. Tata Consumer is not having that kind of volatility what other PL sector stocks like Marico or Emami or Dabur, etc. is having. So slightly you need to be patient and remain invested.
Next query is from Ajay, and he wants to know, Ashish, whether it's a good time to buy ITD cementation. What would be your recommendation on the stock?
Yes, ITD cementation is always a good buy. In fact, in our previous shows also we have recommended this stock to buy, and in future also they look very promising for these kind of companies. So always a buy recommendation in ITD cementation from my side.
All right, this next query is coming in from Swaminathan. He's writing to us from Chennai. He wants to know about City Union Bank. He bought about 1,000 shares. He's not mentioned his buy price, but he wants a target for this one. Kunal, any targets that you have in mind for City Union Bank?
Tricky chart tends to be very zippy in terms of the price trends, because suddenly when you see the stock getting to a breakout, all of a sudden it slips and then it comes back and retraces towards the neckline yet again. So I think we had a similar move for City Union Bank just about some time back. It had managed to give a breakout above 160 plus mark, went up to 174, and now I think it's back again to that 167, which means it could retest the levels of 162 which is the breakout of the neckline breakout for City Union Bank. So maybe in that sense, you might expect the stock to consolidate.
The next query is from Alex from Dharmapuri, and he wants to know, Kunal, whether is it a right time to buy PCBL for short term?
Well, it's an interesting chart. PCBL is something which I've been tracking, and the stock looks to be forming an inverted head and shoulder pattern on the short-term basis at 270 plus mark, where it's trading right now. So you can go for a buy for Philip Carbon in black.
All right, this one, sorry, I beg your pardon. I mean that with this, let's kickstart with the rapid fire. Then Kunal, first coming your way. Raymond is the stock. Arvind from Chennai wants to know whether he can buy at current price for a time period of about 3 to 6 months.
Not really. I would suggest an avoid.
Next query is from Fred, and he wants to know the long-term view when it comes to V2 Retail, Happiest Mind and Techno Electric. Ashish, buy on all three or sell?
On all three. All are good companies.
All right, this one is coming from Chakravarti, who's writing to us from Vijayawada. Lloyd's Engineering is the counter, 900 shares at a price of 22 rupees per share, sitting on a lump sum profit. Kunal, look to book out profits now?
Scale the stop loss towards 70.
The next query is from Prashant, and he has around 1500 shares of IEX. He's sitting on a 20% gain. Kunal, should he continue to hold this count or sell?
Continue to hold on, but keep a trailing stop loss of 175.
All right, this one is coming in from Venkatesh from Hyderabad, Navkar Corp. He has a price of around 112 rupees per share. Good to stay put with Navkar Corp or look to exit. What's your take, Ashish?
I think you can exit once.
The next query is from Sunil from Vadodara. He wants to know what would be a right entry point for Jio Financials. Ashish, what would be your view?
I'm not very bullish on Jio Financial, so avoid in my view. If you want to buy some stock in this sector, I think Bajaj Finance is best.
All right, Bajaj Finance would be the better bet in that sector. But Srinivas from Dubai wants to know about Dalmia Sugars. Kunal, 500 shares are around 430 rupees per share. Should he stay put or invest in another sugar counter?
Stay put over here.
Next query is from Salini from Kerala. She wants to know what to do with Olectra Green Tech. Should she exit or hold this counter? Kunal, what would be your view here?
I would suggest a hold.
All right, this one is from Neetu. Polyplex is a counter, 40 shares at a price of 1900 rupees per share. Makes sense for her to add some more in a portfolio, Ashish?
Yes, you can average.
Next query is from Anush from Telangana. He wants to know the right entry point for Ircon and Aventil for the next 1 year. Kunal, any suggestions?
Ircon, I do track, and I think closer to 280 could be a good averaging point.
All right, Balan has Castrol at a price of 215 rupees per share. Kunal, what's your take? Stay put with this or look to exit?
Hold on.
The next query is from Venkat Ramani from Bangalore. He wants to buy DCX system. Should he buy at current prices? He can hold the counter for the next 18 months. Ashish, should he buy DCX system?
Yeah, I'm very bullish on this system. We can even buy at this price.
All right, with that, we come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, as well as Ashish for joining us on the show, giving us a take on FMCG as well as the banking pack. But with that, viewers, we are totally out of time. So it's a goodbye from Somit, myself, and the team that put the show together. Stay tuned. Market Saloon coming up next.
If you like this video, then like, share and subscribe to ET Now.